Good morning. I'm sorry. Well, afternoon for some, but good morning to others, and happy midday to everyone. My name is Dan Hussey from Zaner Ag Hedge, bringing you a Strategy of the Day update here for January 13th, 2022. Have a little bit of a red day here on the board and on the screen here. So, wanted to hop on, kind of do a little bit of an update on some of the technical developments today. We've broken through some lows, made lower lows and lower highs, corn and beans. Well, corn at least. Beans is still trading an inside day after yesterday's very big outside day. So, depending on where we go beyond the highs and lows of yesterday's candle, could spark for either a capitulation in either direction. So, remember, trading futures involves risk and is not suitable for all investors. And everything I talk about here today is just my own opinion and not a direct trade recommendation. But if you do want to check out more recommendations or other ideas that I might have to offer you, be sure to check out that Strategy of the Week webinar that I hold every Thursday at 1:30 p.m. Central. So coming up in an hour and 40 minutes or so here, we'll be going over some actionable trading ideas, maybe some reownership, some protection that we can look at in this market, and how to build a trade plan off of some of the analysis that I'll go over today and cover in more detail in that webinar later today. So sign up links are in the comment section and of course in the information section of this video. But with all that being said, without further ado, let's hop right into it and take a look at the March 22 soybean daily chart. March beans trading down 24 cents right now at 13.75 and a quarter. We've been banging into this inflection zone, or this, the old highs of our range, the $14 figure. It's a massive area. We were overbought in some conditions. We've now unwound that, and actually in today's candle somehow went oversold in the RSI. I laugh that I've been doing this for so long that I feel like I have a good understanding of every technical indicator, how it operates and what happens, but I would have assumed we would have needed to push below today's low and certainly below the lows the last few days to get an oversold condition on the stochastic RSI, but nevertheless kind of creeping in there on the daily chart. 18-day moving average down around 1364, expecting that area to be some kind of support. I think we're really running into where the support is, and that 18-day moving average is just coming up to meet where that support is around this 1370 area. We've got a little bit of a micro trend line. It's hard to find larger trend lines for this entire trend because it didn't really follow one. There's certainly some channel support that could come in down around 1350. But something that's important to note here is that 55-day moving average and the 100-day moving average, 55-day at 1293, 100-day here at 1287. We had that bullish, that golden crossover, which was a good start, and something we need to see that the last time those two crossed over back in July of 2020, we hadn't seen them go bearish again until August of 2020. Well, for that 2021, for that whole year, we had a pretty sizable complete uptrend. It doesn't mean it's going to happen here and now, but important to note. The 200-day moving average is actually above us, up at around 1309 right now. So, is now above those two moving averages at 1309. So we'd really like to see now that 100-day and the 200-day move back above the 200-day moving average, giving us a true kind of expanding golden cross event for those daily moving averages. Now, from a smaller time frame, the 4-hour perspective and breaking down, what might be going on the smaller time frame here for soybeans. And remember, we're coming off of a news day yesterday where the USDA gave us kind of a mixed bag for row crops. It wasn't a very bullish report in terms of what the USDA said in terms of U.S. balance sheets. Actually, it was kind of a push if you really get down to the core numbers there. They really just moved things around within the balance sheet that ended up with fairly similar ending stock numbers, right, than what trade was expecting. So nothing was totally out of the ordinary there. Where the big, I think, the canary in the coal mine for soybeans going forward through the rest of this year, and where the narrative can really turn quite bullish for soybeans at least, is that drop in global ending stocks. China can only pretend to go hand to mouth, and global soybean consumers can only pretend that they don't need it for so long before inevitably having to cave to pricing. We know that prices in China reached $18 to $20 a bushel last year when we were approaching and getting above $14 beans. that means that the end consumer has already paid inflationary prices and is used to paying those prices, giving margins, in my opinion, for the global supply chain room to improve, which means South American and U.S. prices for soybeans and corn perhaps as well actually have room to the upside from that perspective. Now, that doesn't mean that demand doesn't get price rationed with high prices, and we've been seeing that a little bit here. I think wheat is a good example of a market as of late that really fell to the wayside in terms of its bull rally because of high prices, and that just makes that export demand, fearful of committing to bushels when they don't want to pay the price that they see and might be able to get alternative products, elsewhere. All right, so the 4-hour chart here for soybeans, the big supportive area in terms of fibs down around the 1350 to 1360 area. We already came up from that support back in early January. Okay, we're flagging above 1370 still, and really the price action for the last 2 weeks has been a range, failing to break above $14, but really failing to break down and below 1370 at this time. Gives us a pretty good line in the sand that, hey, above 1370 for soybeans, we're still in some kind of pennant or bull flag. We slip below that level, we certainly need to be aware that that now the only support that's held over the last 2 weeks is now failing. And if that's the case, if market can't go up, it's probably going to go down, if not sideways. Next support, again, we tested it to begin the month. We started off from it around 1340, but below there, that key figure, $13, is just the 50% from 1193 up to 1415. It's 1303 half to be exact, but any kind of maybe more volatile dip and bigger pullback, there's nothing that says we couldn't revisit those levels. But as it stands right now, the way the chart is developing, this very much feels like a market that hasn't quite given up its the strength of the last leg we've had up off of lows, but certainly over the last week has been waning intraday and is threatening to reverse that trend. But yesterday's outside day, that was a bullish outside day, it was a green outside day, resulted in a red inside day today, meaning that the markets have, price actions proverbially kicking the can down the road one more day before picking, a real direction here. We erased, all of those gains from yesterday. We were unable to puncture below the lows of the range we've had, and it leaves us pretty bored and still in the same range, getting chopped up for the most part, the market getting chopped up. So be aware of that here in the near term, that I'm bullish above, bearish below 1370, but certainly while we're below $14, I'm still fearful that we have some sideways, a fight in the market to flesh out. And that fight could result in further downside if the market decides to have a bigger pullback. And let's not forget, next week we have the odd February options going off the board, which are February off of March. It's not a main expiration. And this time last year, we actually saw a big flush out to the downside going into that option expiration before finding a low that resulted in a multi-dollar rally through March and into April. But maybe that's not going to be the case this year. All right, so March corn. Oh, before we flip to there, I guess I did want to mention new crop beans. It's been a fight, proverbially, for beans in the teens and new crop. I just wanted to point out that going above our old contract highs here, trying to stay above $13, that to me feels constructive. And certainly when you look at yesterday's candle and today's candle in the November beans here, we have a rather bullish day still. Today's price action for November 22 beans stayed entirely inside the body of yesterday's bullish outside day. While it's still an inside day, it's an inside day in the top 50% of the range from yesterday's price action. That's holding on to strength from yesterday. Versus, when you compare it to old crop, we really gave back a lot of that strength. So, when you look at it from that perspective and see that, okay, new crop beans are only down 10, old crop beans are down 21. Today was just maybe a reversal in some of that anti-carry trade that we've seen, that inverted market, the backwardation that we've seen in the market, sometimes that idea needs to unwind in the spreads. And today's price action, certainly maybe even price action the last week, seems to be doing that somewhat. Or maybe setting up for this type of event. And in a day like today where we're seeing new crop hold up a little bit better than old crop, is probably that type of unwinding of some regard in the spread market of the bull trend we've had. Now we're building some carry into the marketplace and arguably allowing those spreads to narrow a little bit, where we've gotten very wide as of over the last week, and to the widest levels we've seen in the last month or so, actually several months. So, all right, the March meal trading a very beautiful technical trend in terms of the October through January timeframe. This multi-day pullback we're seeing has been a little concerning. We've started a series of lower lows and lower highs. We're coming up, the next level below today's low would be the lows of January. Not a great level to be retesting. And honestly, getting leaned into a little bit more so than outright beans. It's kind of expected on the meal chart, I would say, in terms of if you watch the complex. And meal has been a leader as of late as well from that perspective. So 1380 highs to the 1415 high. The 50% level held around 397. We traded up to the 420 highs. This was the last in the series of measured moves I was watching. Same anchor, new high now. We've traded today's low, traded into that 406 supportive area. I think $4 is a good technical line in the sand, as well as a psychological level at this point, that bullish above, bearish below for the March meal on that. We slide below that level, full 50% retracement down to 370 might be in the order and in works, and just keep that in mind. But while we're above $4, and there may be one of those tags that just run stops below it, I think while we're above $5 for March meal, we've certainly got the ability for the market to continue higher. Got a little bit of a channel support coming in now. Comes in around 401 as well. So I think there's a confluence of fibs in those areas that could help hold up March meal at this time. Now, 18-day moving average for March meal, 406.5. So market just wanted to come on down and test that here today. That's the technical supportive level outside of just these old lows that we had over the last week that we launched from, that's soon to be holding. We've had the 55-day move above the 100-day. That occurred back at the end of December. Now the 55 days back above that 200-day moving average at 364, and it's dragging that 100-day moving average up now. Still a little bit of ways to go from getting a 100-day over 200-day crossover again, but good to see at least some good price action there. The meal chart has now actually become oversold in the daily RSI. So any kind of overbought condition we had in that very, very parabolic move straight up from 340 to 420 that we had, that's been unwound. And now that the market's had this a little bit of a pullback, if it wants to find a base camp to then continue to a new summit, I think it's got every ability to do so here while trying to test above $4. We'll see if that level continues to hold. All right, and let's take a look at that March corn. Breaking below that 18-day moving average here today. Yesterday, we spiked below it and kind of came back up to test it as resistance. It's right at $6 now. We traded, I guess the market just needed to trade down to that 55-day moving average, down to 588. We also retested that prior low here around 584, and seeing the market make a move down to those levels, but get a bit of a reaction off of it. There we go. Get a reaction off of it so far is pretty good to see. I mean, right, their technical level still getting reactions, but we do find ourselves in a bit of a congestion zone. This 580 to 590, just call it 585 to $6, 15-cent range. Has been a myriad of highs and lows over the last several months. October and November, we put in a lot of highs there trying to break through the level. Now we're putting in lows at this area, trying to hold it as support. I mean, it is as textbook broken resistance tested out as support as you could ask for. So bullish above, bearish below that 585 to 580 area for March 22 corn still. We interestingly in all of this, since December, we haven't had any of those bearish crossovers for the 100-day to 200-day or 55-day moving averages. We've actually just seen them start to, continue to spread out and become a little more bullish in terms of how they look. If they're going to be going into a longer time frame trend, you'd expect them to rainbow and spread out like we continue to see that develop like we saw last year. Every trend line you draw through the highs for corn has broken, with the exception of the most recent one from the 617 highs. But it is interesting to note that the old highs to highs trend line that had been holding arguably the resistance at 585 October through November when we were trading to it, we've really come back down and tested it twice now as support. So again, more of the notion that there is broken resistance being tested as support on a much larger time frame for corn going on right now. So bullish above, bearish below that 585 to 580 area for a move back towards 620, I think is in the works. I would not be surprised. However, let's move to the 4-hour time frame and take a look at where some of the other support might be for corn. Wouldn't be totally surprised if we get another pull, a bigger pullback. If we break below 580, the market wants to run stops and find more of a low back down in the range that we were in. 562 is the full 50% retracement. It's the old lows we found in the end of November, or start of November, excuse me. And the 560, just call it 560, was basically the median and middle of the range that we were trading in from May of 2020 all the way through the end of the year. That the market always just seemed to kind of find its way back towards that. Remember, it's that 550 to 560 area. We just kept finding our way back towards all last year. Maybe it will do that again, but it does seem to be trying to make some progression here on the weekly, kind of basis. It's just a slow and arduous pressure at that. Okay, so with all that being said, feel free to join me here later today and sign up in the links below if you haven't already for that Strategy of the Week webinar. We'll be going here live with that in about an hour and 20, and we'll be covering some ideas of how to actually, jump in on maybe some of this price action, how to put some of these ideas to work for you. So with all that being said, you can always give me a shout over here at Zaner 312-277-0110. We're always looking forward to talk and speak with you about your marketing plans, your trading strategies, be an idea or a soundboard to bounce ideas off of, or maybe give you the ideas you need to get active in the marketplace. Find me on Twitter and Facebook. Shoot me an email, dhussey@zaner.com. Thanks for joining me today, everybody. Leave your likes and your comments in the section below. Have a great day, everybody, and we'll be back with you in an hour and 20 minutes and as price action develops.